Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. December started with significant selling pressure as a DeFi exploit, and macro headwinds triggered over $636 million in liquidations. Bitcoin fell over 5% to around $86,000 during early Asian trading on December 1st. Ethereum declined 5% to approximately $2,800, while XRP dropped 7% to around $2.04. The immediate trigger came from Yearn Finance, where an attacker exploited a vulnerability in the yETH liquidity pool, draining roughly 1,000 ETH valued at $3 million. The attacker routed funds through Tornado Cash and retained approximately $6 million in tokens. Yearn reported its V2 and V3 vaults remained secure, but the protocol incurred a $9 million loss. The crypto weakness was amplified by macro developments in Japan. Japanese government bond yields surged to 17-year highs, with the 2-year yield briefly touching 1.01%. Bank of Japan Governor Kazuo Ueda stated the board will evaluate rate hike appropriateness at this month's meeting. The yen strengthened during morning Tokyo session, triggering broad risk-off sentiment. The Nikkei 225 index declined 1.3%. The liquidation cascade was severe, with nearly 90% coming from long positions. Binance, Hyperliquid, and Bybit each saw over $160 million in liquidations. The largest single liquidation was a $14.48 million ETH USDC order on Binance. Market structure shows concerning signs. Spot Bitcoin ETFs in the US experienced significant redemptions in November, with even BlackRock flipping to net sellers. Ethereum ETFs lost a record $1.42 billion in outflows during November. On the regulatory front, China announced it will intensify its crackdown on virtual currencies and stablecoins. Officials declared that virtual currencies lack legal status and all related activities qualify as illegal financial operations. In contrast, Japan is moving in the opposite direction by implementing a major tax reform for cryptocurrency gains, moving to a flat 20% tax rate aligned with equities, down from the current system that can reach up to 55%. Looking ahead, Ethereum's Fusaka upgrade is scheduled to go live on mainnet December 3rd. The upgrade implements 12 Ethereum improvement proposals to enable Ethereum to handle increased transaction throughput from Layer 2 chains. The biggest change is PeerDAS, which allows validators to check only segments of data instead of full blobs, significantly easing bandwidth demands. In positive institutional news, Sony Bank plans to issue a USD-pegged stablecoin in the United States as early as fiscal year 2026 to facilitate payments for games and anime. Kazakhstan's central bank announced plans to invest up to $300 million into cryptocurrency and crypto-linked assets from the country's reserves. Technical analysis shows Bitcoin's monthly MACD histogram has turned bearish for the first time since November. Technical support levels for Bitcoin are at $84,500, followed by $74,500, then the 2021 peak near $70,000. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.